Good morning, everyone. Thanks for having me here at the Baltic Sea and the Waterkant Festival. So enjoying to be here for the virtual edition. We've done that in the subsequent years live on stage, but the stage really improved. It's very beautiful. So I'll just give you a little bit of an insight about what you might always wanted to know about angel investing, but that's also from two sides. So one side from the startups and one side also for the investors. So maybe what's crucial, what you need to be aware of, and for the startups, how to really find an investor, and what's so special about and what you should be cautious about when approaching a business angel. So and I also want to say hi to Annelie, who's really great support as always. So she's taking care of most of the startups and also of the angel network, our growing angel network. But now I'll start, have a little presentation, but just write down your questions in the channel, and then raise your hand or whatever is on Vimeo and on Zoom. So here we go. As always, how to get started. It starts for the startup side with an idea, and for the angel side, it's more or less, I want to get involved. I want to meet startups. I want to involved or be involved in technology, in scaling businesses, new opportunities. So that's usually how we get approached by angel investors, and obviously by the startups. They have an idea, a great idea, want to scale it, need some money to get it started. So well, basically angel investing, you're going to be cautious. It's like a long-term relation. So building up your business takes time, and an angel usually comes in at the very beginning. So the average time is more than 5 to 7 years, and I guess with 7 years we're in the medium of most marriages that'll last. Just keep your eyes open when choosing an angel, but also for the angel side, also uh, yeah, build a relation with the startup. It's like going out, date the startup, date the team, go out for drinks, dinner, and then look what they have to offer, what their technology and how they build up the business, and then as you guys get to learn each other, then it's probably first step of a good due diligence, and then you're ready to invest, or you're ready to onboard the angel, or you look for some other angels that are probably more suitable to your business and your ideas to support that and to grow that. So but it's always like a roller coaster ride. So there's ups and downs, especially in the early days of founding a startup, and also with a business angel. So he might have some other ideas, might have other perspectives, pushing you to really to your limits. But as always, the roller coaster has ups, downs, but also steady levels, and it's very fast. So usually we see that startups are operating on a very fast speed, and business angels need also to keep up the pace and don't just stand on the sideline and watch, but get involved, and you ride together. So the other thing is the choice. Yeah, usually founders say, "Hey, I'm approaching these angel investors, and I have such a great idea." But bear in mind that usually 5 or 10 other startups somewhere in the world are just working on the same idea. And then imagine a business angel. We're getting a couple of hundreds deals at the angel network. Then individuals get more deals. You get approached on events like this or some other ones. So it's basically the choice you see in a large supermarket. So as an angel, you just don't probably want to invest opportunistic. You want to also make up your mind: where's my strengths? Where can I invest? Where can I give the most back to the startup? Which are the sectors I feel really I can help the startup with my network and scale them, open doors besides the money, because that's always important for an angel. You get two wings. One of them is money, and the other one is experience, network, and so that's also a great fact that needs to be taken into account, especially from the startup side. So you just push really hard to get the attention of the angels, because there's a lot of competition around. You're not the only startup, and it's other investment opportunities as well. Yeah, so you're competing with private money, and private money also goes into real estate, into the stock market, or just on the bank account. And it's not a must investment choice like at the VC level, where you have a fund and they need to invest the money. So business angels also can say, "Oh, I'm not investing this year. I'm just going on a longer holiday and spend my money on, I don't know, a golf track, boat, or charity." So that's always something you also have to take into account when approaching business angels. So on the other side, for the angel investors, you also need to understand the business model, or you should understand the business model if you want to involve yourself of the startup. So be sure you really date the founders before, experience what they're doing, log onto their platform. If it's a software, go deep in and see what are the drivers, what are early KPIs, and do you really understand what they're doing? So that helps you to then open doors for them and getting them involved in the industry, or paving the road maybe for more corporations, for first customers, and all these other instances. And for the startup side, you guys should always ask also your angel, yeah, what can you provide? Can you help us here? Can you help us with that? We need to, or we want to approach this large scale corporation that is really great customer. So maybe the angel comes and say, yeah, I can open up the doors, but let's face it, and let's go small before. Let's try it at some other customers before we go to the large ones, and then take you on the ride with that, and get you a step plan on how to bring your business to the market. So that's crucial that both sides get the understanding, and especially the angel also, of the business model and the underlying technology of the startup. And be sure it's a long investment horizon. So like I said, it's like a marriage, but especially in early days, it always takes longer than anticipated. So I myself have in my portfolio a couple of companies that also started out great, but it took the market to be really ready for the product. So especially now we're seeing a great shift and a mindset towards digitalization. That wasn't the case in the subsequent years. So yeah, we've been engaged in technology that is now in the COVID times getting more appreciation, because everybody is looking into how to scale digitally, how to convert business models on a digital level. And prior to that, you sometimes in some industries, in the SaaS industry, you had really trouble to push it in the market, and it took like 1, 2, 3 years um, to anticipate and to adapt these models and to bring it into the sales channel. So speaking of the sales channel, especially when you're looking into software sales, B2B software sales, and with large industry clients, it can take like 18 months to really convert a customer, and after a POC and a trial, to adapt your product. So business angels will help you with that. The founding or the startup teams usually underestimate the time frame. But also for the angel, don't look for the quick money. It's probably not going to happen. If it's there, it's good. But the timing, you usually can't really prevent and pretend. So rather go for the long haul and really hustle over the long time frame, and don't expect to have your money back in I don't know, 24 months or something. If the founder is telling you he'll pay you back in 2 years, uh, don't listen or really hard questioning that. Usually it takes longer till you build up a great business and to bring it towards an exit. So yeah, business ideas for you as an angel. Yeah, what's with the business ideas? So usually go with the ideas who have a lot of potential, have a lot of great market. So usually hear VCs looking for $1 billion markets and problems. So as a business angel, you might now want to go for the real large ones, but have in mind that you need large markets to take a fraction of that with the business model of the startup, and to have a large market where you can go in. And so that's what to question when looking at the startups. So some angels also have a total different approach. They're going more for the idealistic ways, or want to go into impact ventures. But also impact ventures should have a potential and should not be a subsidized business, and should also be or create the impact with a self-sustaining business model. And so that's also with the teams that you present, the market size you're in, uh, scale, and if it's not in Germany or not in Europe, look at other markets that might be earlier where you can adapt the business model. We've seen that lots of times where founders, the market wasn't ready in Germany yet. They went overseas or they did something else, tweaked their business model, pivoted it, and then found right market fit and the large potential. So speaking of large markets, there's usually the Tom Sum Sum model. Most of you might be aware of that. I always urge the founders to include that in their business model, make up their mind what really is their total addressable market and their serviceable addressable market and the share of the market that they want to look at. And I also want to remind the business angels to get familiar with this approach and to maybe work on that if the team doesn't provide it yet. Work together with that so you get a better understanding of the business model and the markets, or you can bring your experience if you're as an angel coming out of that market towards the founders. Yeah. So and if it's proven that the share of the market would be too small to just build a great sustainable business, then you might want to reiterate and look for other markets. So that's a really good opportunity to work together with your angel investors, but also as a team to prove your scalability and the market fit. So we all know that. The team is usually crucial, and you as an angel, you just, like I said, within the marriage, you want to make sure you want to fit in there. It's going to be fun. You want to just not talk over business all the time, but also go out here in Kiel, maybe go sailing, go out for a beer, and just socialize also with the team. It's important, work hard, and then also don't underestimate the um, yeah the private talks and whatever is shared with you. So then there's trust, and you really feel comfortable with the team. You can probably achieve more. And also, as an angel, you want to have fun together. And if it's not, if it's just a tense business relation, usually it won't last for the long haul that I described prior. So team is crucial. So even if it's not the greatest idea, but you have a really good team, they'll probably find out together, maybe with the angel, that they need to twist the idea, work on that, work on the product, work on the market, and then a great team always finds its solution to be successful, push it in the market, grow the business, and then also scale the startup and help to make the startup yeah scale, and also the investment of the angel going to raise, and you get better returns with that in the long run. Also, it's about communication. It's understanding the startups. So we usually have the boomers and the millennials. They are, yeah, really brought up with a different kind of work. So most of the angels tend to be a little older, maybe silver hairs or boomers. So they come from a usually from an industry background, scheduled meetings, um, written reports, scans, and fax machines. So maybe as a millennial, as a founder, take that also into account that uh, they might not be familiar with group chats, with Slack, and all the other topics that you have based your startup on and that you are using frequently. So also fill in your investor, your business angel, and say, hey, here's how we do these things. It's a different approach. It works. Also, we don't need scheduled meetings. We'll just open up our Pipedrive account so you can see the flow of our lead pipeline, or we'll include you in our Slack or Microsoft Teams account so you can chat with everybody through our group. So we'll also do our reportings on I don't know, Investory.io or some other um, platforms. And yeah, you should also onboard the angel investor to your organization and how you drive your organization with the technical backgrounds, but also make standard meetings. A good format is once a month or every quarter to go through the numbers and what happens. So the younger the startup is, usually you will have more frequent meetings, more frequent interaction. And then when maybe you're at the second round of funding or the third and the VC comes in, then the business angel usually can step back, or you can prolong the time frames where you do your reporting. But communication is always crucial, and you just want to make sure that you're on the same page. Find a channel that works on both sides. So yeah, you also want to watch that. Uh, and getting the due diligence right. Yeah, don't over promote your business as a startup founder, and describe it with the words that also your investor understands. Yeah, so usually it's just a different interception of what you had in mind and what you want to explain and what you want to come across with. And usually it's oh yeah, we're doing business with these large scale companies, and it's maybe not a business, but you have a first conversation on a startup panel or at an event, and that's way down the road until you really can call it a business relation. So usually startups put up logo walls or whatever and sell it as leads or as customers even. But want to make sure that you say, oh no, it's not customers, it's companies that are interested in our product, or we had a first meeting with them, or first talk or first email. But we still need to see that we'll turn those into customers. And like I said, it's usually a really long time that you need to work on that. And so the angels usually know that they come from this background, sat on the other side, um, bought in technologies, and spread that over an organization. So with some large scale organizations, one CEO you told me, I have to make sure that the startup is going to be around for the next more than 3 years, because if I want to introduce their product to my organization, I also have to make sure that when I introduce it in the small scale subsidiary down in southern Sicily of Italy, it usually takes me 3 years to reach out to them, and your product better be there after these 3 years. That's the time frame I have to deal with that in my organization until everybody understood that and is using your product. So describe it the right way, be precise, and yeah, specifically, don't lie, don't put other frames on that, and just put it like it is in the due diligence. So remember, you're in for a long-term relation. It's going to be the day when someone is discovering that it's not your customers, they're not paying, and you just randomly ran across somebody from the organization and it's not the right bolts. Also with the numbers, plan them wisely, go more for a, smaller scale, maybe question it. Also talk with the angel investor and you do the numbers together maybe. So for the angel investors, maybe you want to invest in a group. So to share your experience, especially if you're new to the scene, look at what other investors are doing, maybe join as a club deal. We do it quite frequently at the Baltic Business Angel Network, having a couple of angels joining into one deal so you can work as a team with the team on the startup side, and it usually helps to get a better understanding and to better help the company and protect your money and scale the business. So these are all theoretical topics you take into account. You usually do that, but then comes reality, and reality usually looks, oh gosh, what the fuck. So it usually totally turns out awkward. So we see that nobody had the corona crisis on their schedule. Everybody was preparing for something else, but then you're in an industry that's getting heavily hit, maybe event industry, and you have to totally shift your business model, going digital, doing virtual events like we're doing here. So that takes gets everything from the usual business model off the shelf, and you have to start from scratch, start new, look for the unexpected, and be prepared. So now I'm hopefully prepared for some more questions from the audience, whether it be from the startup side or also from the investor side. So look forward for your questions. I think there's a first one already from the audience. Uh, Okay, so one is investment focus, pre-seed, seed stage, or also A funding. For the business angel network, we're usually going in earlier. So I personally like to have a product or a prototype to really see what the startup is in. A funding tends to be more the turf of some VCs or people with really deeper pockets. So we've seen rounds in our network ranging from 25K up to 1 million in a consortium. So it's there's always quite a bandwidth with angel investors. Like I said, also when they're investing in a group, they might also cover up a pre-A round, maybe, or even an A round. But at the earlier stages, it's more likely to convince a angel and don't put all your money in a basket at once. So maybe you want to start smaller and have some aside for the crisis or for the next funding round. So, Annelie, are there questions that occurred on your side?
I hope you can hear me right now.
Yeah.
Okay, fine. Perfect. So we have a second question here in our chat, and this is Yuri, and he's running a VR startup and creating games for more empathy for our oceans. And he's asking which angels from our BBA network might be right for him, or can startups look up our investors?
Okay, yeah, great question. So if your business model involves ocean, it's more likely to look for angels that are close to an ocean or a coast. So at the Baltic Business Angels, there's usually an awareness for um, ocean or maritime startups. So if there's someone really interested in that and has a background, you just apply and present at one of our events. Usually, I'm surprised at myself on how colleagues judge the business model, and they say, "Hey, yeah, I've experienced here prior to my job in the earlier days. I was already experimenting with these things. I have a passion for that, and I want to learn a little bit more about that founder and that startup." So you can usually never predict it, but it depends on how you're presenting and if there's interest for like maritime ocean based startups or VR, I would invite them to just share their business model, approach us, and I'm sure yeah, we'll invite them, and then we'll see who is interested. And as always, yeah, you need to look at a lot of angels before you find the right one. So usually it takes an approach of 70 investors, and then one of them says, "Hey, that's just the thing I'm in, and I want to invest."
Cool. You talked about the right investor. So the question is,
Hmm.
are there any indicators to find the right investor? Um, so we have this topic, but what means to have a right investor? Are there good and bad investors?
Well, I wouldn't say there's good and bad investors. So it's more or less involved or less involved investors. So, like I said, with the two wings of the angel, some of the angels say, "Okay, I bring the money, and then I want the reporting." But other than that, I'm building up a larger portfolio. I don't get involved personally, so that's fine. But you, as a founder, need to know that in advance, and need to know that he's probably not gonna, or she's not gonna be spending too much time with you. It's more for the returns, and they're giving you the money and wanting a great reporting. But also on the other hand, there are the investors that like to get involved, spend a little bit more time on the other wing of the angel, and saying, "Hey, I'm here. I'm going hands on with you guys into your business model. I have a deep understanding of the market, and I know where you're heading. I've been there before. I have a huge network. I'm just helping you scale and drive you with it." So that's what I said, when you need to go out and date with your angel investor. So you need to learn about the preferences, and the angel investor needs to learn about the startup, what you're expecting from each other. So after the dating period, then you have a profound knowledge of each other, and then you're ready for the marriage and for the investment. And yeah, it's these and those angels, and you cannot truly share, but you're going to ask the right questions. Yeah, as a founder, don't be shy. Say, "Hey, what kind of angel are you? How deeply you want to get involved? I need help with this, that, and that. Can you provide that? If not, then rather look for the other, or say, hey, yeah, I'll park you. I need the money, but I also need experience. So I'm looking for someone with the experience." Or maybe the angel has some colleague in the network who's bringing that experience to the table. I've seen that before. Someone is investing a larger amount or asking another one with the industry experience, "Yeah, you want to join the deal because you're bringing more experience with it." So it's always this and that, and that resembles to the 50, 70 angels you need to date before to find the right one, maybe.
Yeah, thank you. So another question is, what kind of documents do I need to address a business angel? So sometimes, I mean, business angels are different, but what are the typical documents that startups should prepare? And maybe are there goes and no goes for the pitching?
Oh yeah, also good question. So in the ancient times, or in the older times, it was always referred to a business plan. Yeah, you need to have a business plan to approach investors. Yeah, in the past years, it's been more reduced towards a pitch deck and your Excel model with the numbers. So what I like to see is maybe first of all a one pager and a good pitch deck. Be aware that it's not longer than 10 to 12 slides. Be precise, bring your story over. Like I said, uh, get the technology, the market, the team, and also the amount of funding you're looking for into your deck, and then get the first interest of the investors, and then you can deep dive and look into the technology, present what you're having, go into the numbers, send the Excel model to the investors, help them to understand what are the drivers of the business model, what are the KPIs, and yeah. So most crucial thing is a pitch deck, and your presentation skills. So as running an accelerator, we usually spend a lot of time with pitch training, helping the startups, storytelling. So getting their story right, and also deliver their product and their startup into 90 seconds. So also someone not from the industry, not with the background, can really understand what problem you're solving and what you're into in the market.
Okay, fine. Thank you. We have two other questions. Thank you for your questions. The first one is, as a startup founder, I would like to stay in the driver's seat. Could the angels, after investing in our team, could overrule me and us after their investment?
Oh, okay. So yeah, it always depends. You should be in the driver's seat. Yeah, when you want to scale your business model and you want to go out and raise more capital. So usually it's a rough calculation that you should not give away more than 20% per round. And for the A round or after the A round, with your team as a founder, have the majority on the company, saying more than 50%. So of course the angels want to have some influence on that. Usually it's in your investors agreement or in your share purchase agreement or convertible note agreement or whatever you're investing into. So usually you have a catalog where there's some kind or some decisions that the investors have a veto right. So also with the angel investors, you'll get that later on from the VC. So well, you can get used to that and prepare with the angel investor. Usually he probably doesn't need to have um, the majority stakes, and you should be aware of that. If there comes an angel investor who says, I need more than 25% or 50% of the company, um, yeah, might be, but then you should bear in mind that then the company is dead for more fundraising, because then it's owned by the angel and not by the management team. And the management team should be incentivized and to drive and scale the business, not so much the angel. So there's other rules or techniques where you can have, I don't know, then a liquidation preference or something else that ensures that the angel gets the money back prior to others or to the founders. But don't let them overrule every decision. You should be in the driver's seat, and the angels is going to there to help you and not to overrule and take over your business.
Okay, great. Yeah, next question. Do you have any more general tips or key points that you experience as crucial when trying to enter, especially the German market, with a startup? So, for example, in comparison also to other international startups or markets.
Yeah, like I said, in especially in Germany, it depends on in which market segment you're in. If it's a B2C product or a B2B product, like I said, I'm more specialized in the B2B world, and there just be aware that it takes longer. Yeah, in international markets like in the US, you'll just get a no, quite frankly. But here in Germany, it just tends to, oh yeah, we're looking at that, and then we're taking one loop, and we need to involve more people from the organization to really understand it. And it can take like 18 months to really come through an organization and bring your product into that environment there. Yeah, like I said, maybe you should look with your product after or beyond German markets, somewhere where there's a more need or more openness to embrace the product and a willingness to pay for that. And maybe there's a more need for the product and the problem solving. So go where the problem is the largest and where people would also pay for solving the problem. And I think that's the more general tip. It doesn't necessarily have to be in front of your door. So look beyond Germany or your doorstep and just see where there's a need for your product.
Okay, thank you. So another question is, when I'm talking to business angels and to find the right ones, and maybe there are 2 or 3 business angels that are interesting for me, how can I get them together? So if I would like to have these 3 on board and they don't know each other, what is the best way to get them in contact?
Okay, yeah. So be open about that and frank and say, hey, I've been approached by some more investors. I like all of them. They're offering complementary knowledge, and everyone bringing money to the table. So it's always a good thing, and business angels usually are open and also eager to get to know more angels. So say, yeah, why don't we just meet? I want you to get to know the other two, and maybe we can even make the round a little larger, or you all can keep some cash aside for later rounds. And I would like to get all three of them involved. You need to explain them why and why you want to have them, or if it's just for the money and they're offering the same qualifications. Yeah, so it might be in that it might be also hard if they want to invest the whole money in the round, but usually that's not the case. So they're not competing against each other. It's more let's do it together, share the risk. Yeah, I think risk sharing is a great topic that you can provide then, and say, hey, I like to have all three of them. One has an HR background, one has a tech background, and one has a I don't know, lawyer or business consultancy background, and you would make a great team and help me with a startup. And the good news is, don't spend all your cash at once. Take it aside for maybe a later round, or we make the round larger and have more money to for the run rate and achieve more milestones. So just be open, talk with them, and if they don't want to invest in teams or the court, then they'll say no, and then you say, okay, I was just going to ask, and if not, then that's the case.
Okay. Uh, Maybe onto that. If I'm looking to for an angel, or if I start to look for an angel, how much time should I not invest, but how much time does it take to close a round? So
Yeah.
what is your experience?
So that's a really good question. So you should not go out when you need the money. Usually, you start your pitching and your financing around when you don't need the money. It's always hard in the beginning, but you should anticipate some time with the angels. Yeah, like I said, it's first there's the dating period, and you rather want to date a little longer before you really go into relation, and when the business model, the business angel invests the money in your startup. So usually it can take up to 6 months to really close around, but at least 8 to 12 weeks should be the preparation. You need to prepare your documents and things. If that is already done and approved, you can go out and speak to angels within a couple of weeks. But be aware that usually the angel groups have set dates where they invite startups once a quarter, once a month. And so if you're not hitting that spot, or the next round is already full, you need to push back into the next session. So there you have a time frame. And also investors want to learn a little bit. German investors tend to watch the company and learn about your KPIs, and watch it for I don't know, 1 or 2 months, how you're really achieving your goals that you're presenting. And yeah, just be prepared. It takes longer, usually longer than expected, up to half a year, and go out early. Always talk to angels, even if you don't need money, so you can fill them in, and they can just look at your company and say, oh wow, great company, great founder, I would like to get involved there. And then when you're doing the next round, saying, hey, I'm doing the next round, and you already have a list of, I don't know, 20 angels that you can email, and then it really goes fast, or faster.
Okay, thank you. Um, how do you define a successful investment, or how do angels define successful investments?
Yeah, so it's always the return. So and a successful investment has a great return, great multiple on your money back, or maybe also an IRR. Usually IRR over the long time frame is not really too good, but in some cases, yes. But it's also the impact that you're bringing into the startup. Yes, so you created jobs, you created a successful new company that is now stable in the market, or you have success raising follow-on rounds. So it depends what you as an angel, what you really want. If you want to say, hey, I'm here in northern Germany, and I want to create more startups in my hometown, yeah, then the number of sustainable founders and teams that you were able to drag into that space and to your hometown might be a great KPI and success factor. For others, they say, hey, I want to scale a startup, bring it international, and it's now shipping to 20 countries and has 3 international VCs in there. I watered down, and so my IRRs are not so good, but that was the impact to bring it beyond Germany, maybe. So it usually is. There's another driver beyond the monetization or the monetary KPIs for each angel. So I think we have time for one more question, maybe. Anli,
Yeah.
is there some more?
Yes, I take the one of from Marcus. Marco, I will answer you in the chat. Marcus asked, how do I make sure that my business idea will be treated truly confidential? Did you experience standard NDAs as enough?
Well, bad news is angel investors and investors don't sign NDAs. So because they're looking at various deal flows, and like I said, it's like at least 10 teams working on the same thing. But the good news is the angel investor usually does have a daytime job and is highly involved and don't have the time to do it themselves. So that's why they're looking into great teams, great founder, where they can give them money and a little bit of a help, and they'll just execute it. So that's why we're looking at all these teams. So we're not a startup factory where we're doing business models ourselves. So we're looking into great teams that execute these models. And if you're the great team, you don't have to be shy of sharing your idea, and you don't need an NDA. It's always the market that proves you right. So you need to be faster than other teams, have a better product, have a better market understanding, and yeah, then the market will prove you right. It's not the angel investor, and usually they not take your idea and make it themselves because they don't have the time and they can't. That's why they're in the market. And if they do that, you just do one investment where you steal ideas, and then you can be pretty sure that this angel is going to have the copycat on his hat, and is not going to be invited into other groups. So we have investing standards at the Baltic Business Angels, and every angel signs off these. That's our NDA, and I think that's something that each founder has to be aware of. It's not the angels copying; uh, it's your competitors who are better off faster. Okay, so I think we're done. Please feel free to email us more questions if you have some, or just turn in your business plan, your pitch deck to deal at bba-sh.de. Also, all the questions, we're happy to answer them and hope to invite and see more teams at our next events. Or you can reach out to me via email, phone, or others. Okay, thanks everybody. It was fun, and thanks for having me here.